What is up, everybody? Welcome back to the channel. Today I wanted to go over a HELOC, or a home equity line of credit. I wanted to share my experience obtaining a home equity line of credit of almost $200,000, what I plan on using that line of credit for, as well as if I regret it, if I think it was a good idea or a bad idea. But before I start, you guys, if you could do me a favor and please hit that like button, that thumbs up button down below, I would truly appreciate it. It really helps me grow the channel and allow me to provide more content like this to you going forward. So first, let's go over what a home equity line of credit is. A home equity line of credit, or a HELOC for short, is a bank program that allows you to access the equity that you have in your primary residence, basically as a credit card. The equity in your house is the value of your house minus any liens or mortgages or debt that you owe on the property. Now, I'm a real estate investor and an investor in general, so the more access to capital that I have, the better. So I started looking into HELOCs. Since HELOCs are not government-backed mortgages with strict guidelines created by the government, each lender is going to be slightly different with their programs, their guidelines, and their requirements. First things first, you have to show the lender that A, you have some income, B, you actually have equity in the property, and C, maybe most importantly, you have good credit. All of those factors will play a role in whether you're A, approved, B, how much you're approved for, and C, if you are approved, at what rates and terms. Generally speaking, most lenders out there do provide home equity line of credit programs, so shop around, talk to the national banks, local and regional banks, as well as even credit unions to see which lender has the best program that fits your needs. So I'm going to use my own situation in my own house as an example. I bought my house in September of 2020 for $735,000. I put 20% down at the time, which is $147,000. So right away, I had $147,000 of equity to tap into, and I had $588,000 of debt on the property. Since then, the housing market has continued to go up, and plus I did some improvements to the house that brought the value of the property up as well. So I used the lender M&T Bank, but I would assume that most lenders have a fairly similar process. I simply went on their website and filled out a HELOC application. They asked me my address, my income, how much is owed on the property, and how much I'm looking to get on my line of credit. One really positive about HELOCs is the lack of closing costs. With my lender, I paid absolutely nothing out of pocket. Once the application was filled out, they reached out to me directly to schedule an appraisal. Once we had that scheduled, a licensed appraiser came to my house. They looked around the house, inside and out, and they put an appraisal together. Based on the recent comparable properties that have been sold, they appraised my house at $870,000. So based on the appraised value of $870,000, as well as the about $574,000 still owed on the mortgage, that means that I have $296,000 worth of equity in my house. The lender's not gonna give you access to all of that equity. That would be too risky for them. Instead, the bank bases what they will lend out to you based on something that's called an LTV, loan to value. The loan being what is still owed on the property, and the value being obviously the appraised value. Basically, they take the appraised value of your house, they apply their specific LTV, usually it ranges anywhere from 75 up to 90%, and then they subtract the amount that's still owed on the property. So back to my instance, if you take the $870,000 appraised value, you apply the LTV that my lender offered, which was 86%, that brings you to $748,500. Then subtract the still owed mortgage debt of $574,000, and I was left with a credit line total of $174,200. So once I draw on this credit line, I have what's called an average daily balance. HELOCs are not amortized like a regular 30-year mortgage. So the amount of money that you owe in interest is based on the average daily balance of the account. You could take the money out and pay it back as freely as you like, as long as you're making those monthly minimum interest payments. So let's talk about the interest. Once again, each lender is different, but it seems like almost all of the lenders base their rate off of the prime rate, which is set by the Federal Reserve, plus a spread of a certain amount. But you should definitely ask the lender that you're using if there's any promotions or discounts that you could apply to your rate. For instance, I saved 0.25% simply by opening up a free checking account with the lender. So it's definitely something you want to ask about and look into. The lender basically treats this as like a normal checking account. You get a regular stack of checks and you could technically use it for whatever you want. So, do I think that a HELOC is a good idea or a bad idea? My plan is to use this credit line for either a down payment or on renovations on a buy and hold investment property. If you're using a HELOC on an investment that's going to make you money, it is a great idea and a great access to capital. You could use it for real estate investments, real estate flips, or really any investment that you think the return is going to beat out the rate that you're paying on the line of credit. But obviously each different investment has its own varying degree of risk. I would say as long as you're generally disciplined enough to control your debt in a positive manner, you should definitely get a line of credit on your home equity. It is a great access to capital and you could definitely build a lot of wealth pretty quickly using it. But if you're one of the average people out there who doesn't have any discipline in controlling their debt to use on daily, weekly, or monthly bills, or if you just want it just in case of an emergency, I would strongly advise against getting a line of credit on your home. That is it for today, guys. Thank you so much for watching. Let me know if you have a home equity line of credit, what you use it for. Also, if you've made it to the end of this video, thank you so much again. And please think about subscribing down below to see more of my videos on real estate, entrepreneurship, and investing. Thank you so much again, and I'll see you next time.